Welcome, my friends. Yesterday, Uber reported Q3 earnings. And it was, well, okay. As usual, Uber reported a loss. This comes one quarter after Uber CEO Dara Khosrowshahi promised profits. But, on the positive side, the loss was not as large as the colossal losses of Uber past. As you probably know, few companies are as polarizing as Uber. One reason, of course, is the perpetual losses that many investors do not believe can be eliminated. Then, there is the never-ending debate about whether Uber drivers are employees masquerading as contractors. Then, there is the constant threat of various governments wanting to classify Uber drivers as employees. And, there is also the uneasiness related to over-reliance on the gig economy. So, more than a decade after its founding and billions in losses, Uber still has almost everything to prove to the world. Most importantly, staying power. There are many investors predicting the demise of Uber. So, there is a lot hanging in the balance. For now, there is the Q3 earnings results. And, as I see it, those results, for whatever it's worth, really do nothing to settle the questions surrounding Uber. So, the future holds a lot of questions as it always has for Uber. What do these results mean for Uber? What do they mean for the overall ride-hailing business? What do they mean for tech companies? What does it mean for the economy? And, what does it mean about the future of the United States? But, before we get into all of that, please press the like button and leave a comment below. I would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Uber reported a Q3 earnings loss today. That is the bad news. The good news is that the results beat Wall Street analysts' estimates. Revenue was stronger than expected and management gave strong fourth quarter guidance. Shares in Uber rose 15% when the stock market opened Tuesday morning. Here is a summary of the numbers. 61 cents per share loss versus 22-cent loss expected by Wall Street analysts. $8.34 billion in Q3 revenue versus $8.12 billion expected by Wall Street analysts. The total Q3 earnings loss was $1.2 billion. But, $512 million of that loss was attributed to revaluations of Uber's equity investments. So, the adjusted operating loss is close to $700 million for the quarter. Revenue of $8.34 billion is an increase of 72% year-over-year. Uber delivered a strong quarter, and benefited from booming travel, easing lockdowns and shifts in consumer spending, said Uber CEO Dara Khosrowshahi in a prepared statement. October is tracking to be the company's best month ever for both mobility and total company gross bookings, Khosrowshahi continued. But, after the last few years, we have learned not to take anything for granted, he also added. With continued rigor around costs, discipline on headcount, Khosrowshahi continued, and a balanced capital allocation approach, all supported by our leading technical and operating capabilities, we are well positioned to deliver expanding profitability over the coming quarters, Khosrowshahi said. You have to wonder about that. But, maybe we can give him the benefit of the doubt. In recent quarters, Khosrowshahi has been focused on earnings before interest, taxes, depreciation, and amortization, or EBITDA as is commonly referred to. Warren Buffett refers to EBITDA as earnings before all the bad stuff. So, it is something of a fake or concocted version of earnings. Of course, an EBITDA profit is better than no EBITDA profit. But it is still far from actual cash flow positive profit. Uber reported a record adjusted EBITDA of $516 million for the quarter. Believe it or not, that was an all-time high for Uber and beat Wall Street expectations of $440 million. Khosrowshahi said Uber expects gross bookings to grow between 23% and 27% year-over-year in Q4. And that cheered up Wall Street analysts. Khosrowshahi also guided to an adjusted EBITDA of between $600 million and $630 million for Q4. But there was no prediction of when Uber would actually become profitable on a positive cash flow basis. Here are the financial results by business segment. Mobility was $13.7 billion in gross bookings. That was short of the estimated $13.83 billion. Delivery was $13.7 billion in gross bookings. That was short of the estimated $14.01 billion. Uber experienced rapid growth in its Eats delivery business during the COVID-19 pandemic. But the mobility segment revenue surpassed Eats revenue in the first half of 2022. That is because riders resumed taking more trips. And that trend continued in Q3. The mobility segment achieved $3.8 billion in revenue as delivery reported $2.8 billion. Uber's freight business segment booked $1.75 billion in sales in Q3. The number of monthly active platform users increased to 124 million in Q3. That is a 14% year-over-year increase. 1.95 billion trips were taken on the platform in Q3. And that is a 19% increase over Q3 of last year. Uber has also recovered 80% in terms of the number of drivers who have returned to the service, said Khosrow Shahi. Shares of Uber have declined more than 36% so far this year. But that is basically in line with other tech companies, such as Google and Microsoft. Shares in Uber fell more than 10% in October. That decline came after the Biden Labor Department proposed that regulators and courts be allowed to reclassify gig workers as employees. Uber, Lyft, Instacart and DoorDash would have their business models devastated by that type of rule. All four of those companies have argued that flexible schedules related to being a contract worker are attractive to workers. But some labor experts and activists have disagreed, saying the companies use the contractor model to reduce their own costs and deny workers important protections, said the White House. Uber's supply side may actually be benefiting from the inflationary environment, said Khosrow Shahi. As expenses rise and people are paying more for essentials like groceries, he said they are also signing up to drive for Uber, Khosrow Shahi continued. If anything, 72% of drivers in the US are saying that one of the considerations of their signing up to drive on Uber was actually inflation, he also noted. So, I would say that this is something of an improvement for Uber. But the jury is still out on the most important questions that investors have about Uber. You might wonder who would hold Uber shares and why. Certainly, the company has not proven that it has profitability. And it has not proven to the world that it has long-term staying power. Eventually paying a dividend appears to be out of the question for the moment. But there are some positive takeaways here. First, the freight business segment is becoming an appreciable part of the revenue pie. Second, Uber has its earnings moving in the right direction. Third, cars are becoming ever more expensive to own. That trend works in favor of ride-sharing companies. But, what do you think? Please leave a comment below and press the like button. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.